So some REITs are actually starting to get pretty interesting here, and we're going to break down one that I actually may be adding to the portfolio very, very soon. So let's talk about Vici Properties. Now I want to be just straightforward here. Vici Property definitely deals with more of the consumer discretion type real estate properties. But when we look at where the price has gone versus where their earnings have gone, it's really making this a very interesting buy. Now, Vici has a huge footprint in Vegas with Caesars Palace, MGM Grand, and the Venetian Resort. Along with 54 gaming facilities, they have 39 facilities that are not gaming related, and over 500 plus restaurants, clubs, and sportsbooks, which is why I'm saying this is definitely a consumer discretion REIT. So two things I want to point out with Vici Properties. First off, it has over a 6% yield at this price and a forward funds from operations sitting at under 11 times. When we compare that to the most popular REIT out on the market, which is Realty Income, that sits at over 12 times funds from operation, a similar dividend yield. So right off the bat, valuation to me is a little bit more compelling for Vici, especially when we look at how fast this company has grown. Now, over the last 5 years, the stock is up roughly 23%, but over the last year, it's down 16%, mainly due to the interest rate environment. And I definitely find it interesting between $22 to roughly $25. But as this company has sold off, take a look at the revenue and earnings growth. It's going up exponentially here, and that's where I see biggest opportunities. Not only is this company consistently growing their dividend, but what you want to see is earnings growth and revenue growth, any sort of stock that you own. So yes, dividends are very nice, but they essentially come from profits. And if a company is not growing their revenue and profits, well, that dividend eventually is going to have some problems. And what we can see here is that Vici's price has remained fairly flat over the last 5 years, but take a look at the revenue growth and earnings growth. When we look at sentiment around the stock, we have price targets as high as $41 and as low as $30. Currently, the stock is trading around $27 a share. I'm looking for it to break below 27 before I start building into a position, and I'd be building into that position all the way down to roughly $22 a share. But over the last 4 years for Vici Properties, take a look at that revenue growth. Now, the other thing we want to factor in is the amount of dilution that takes place with REITs. REITs usually raise capital through share dilution and taking on debt. But here's what I want to point out. Vici's share dilution has doubled over the last 4 to 5 years. But when we bring that back up to revenue has actually 3x'd. So to me, this is showing that they are being responsible with their revenue growth and the share dilution. We can see exponential EPS growth with that and beautiful free cash flow following. So valuation seems appropriate. You have a very strong dividend yield. For the last 5 years, they consecutively grown this dividend along with paying out a dividend. And we can see that they've grown exponentially on revenue while not diluting shareholders too much here. So overall, when I look at the valuation and where this company is heading, the pros I like about Vici is the fact that they're fiscally responsible, and I can make a lot of sense from top line revenue all the way down to earnings per share with funds from operation. The downfall is they're not as diversified as I would like, but because the consumer has been extremely strong and because Vici has grown its earnings exponentially, but on the other hand, with that strong consumer that wants to live life experiences, Vici has capitalized on that. And I'm just not so sure that the consumer is ready to tap out yet, even though consumer debt is skyrocketing. And I do think earnings will deteriorate by the end of the year. I still have to put some positioning in the fact that I could be wrong. And I believe Vici is the better way to play this. You have a nice dividend yield that's fairly safe. So even on down days, you have a pretty high yielding stock where I believe valuation makes a lot of sense. And so currently the stock's trading right around $27, hit a low of $27.02 today. And if it breaks below $27, there's a good chance that I'm going to start building out a small position in Vici Properties with the hopes that it does get down closer to $22 a share. And as you can see here, even though I believe that there could be some more pain coming ahead, I think we're getting close to yields kind of reaching a topping point here, which should bode well for your REITs that have very good managers and very good tenants. And so if I'm wrong and the consumer does stay strong, I want to own something that can capitalize on me being possibly wrong. And I think Vici Property definitely fits that suit. So as always, guys, really appreciate your time, and we will see you in the next one.